Hello, my dear students. This is Vanmati, Head Department of Corporate Secretaryship. In this video, I'm going to explain regarding the comparative statement balance sheet from the chapter Financial Statement Analysis. Now, first of all, what is mean by financial statements? Financial statements are prepared by the business entity at the end of the accounting period to ascertain the result of the business activities and also the financial status of that particular business. And what is mean by financial statement analysis? According to Metcalfe and Tittart, analyzing financial statements is the process of evaluating the relationship between component parts of the financial statement to obtain a better understanding of a firm's position and performance. So, financial statements are involved rearrangements of data in accordance with the purpose of analysis, application of financial tools, evaluating the relationship among the components parts and drawing conclusion based on the analysis. We are going to see about the various tools involved in financial statement analysis. So first one is comparative statement, second one is common size statement, next, trend analysis, ratio analysis, fund flow analysis, cash flow analysis, and last one is cost volume profit analysis. So these are the financial tools which are involved in this financial statement analysis. In this video, we are going to learn regarding comparative statements under this comparative statement balance sheet. What is mean by comparative statements? Generally, comparative statements are prepared for 2 years, and the comparative statements are the statements showing the actual figures at different periods of time and the changes in the figures over the period in absolute terms and in percentage. And in comparative balance sheet, we are going to see the statement showing the amounts of assets and liabilities at different period of time along with increase or decrease in each item in absolute term and in percentage. This is called as comparative balance sheet. In previous class, I would have given the format of comparative balance sheet. So under this, you would have seen particulars year 1, year 2. So usually in comparative balance sheet, we will compare only 2 years and then increase or decrease column, percentage of increase or decrease column. And after that, under particulars, we will be having two terms, assets and liabilities and capital. Under assets, we will be having current assets and fixed assets. And under current asset, we will be totaling all the total current assets, which will be mentioned as A. And under fixed asset, we will be totaling all the fixed asset as total fixed assets B. And finally, we will be arriving total assets A plus B. Under liabilities and capitals, we will be having current liabilities, long-term liabilities, and capital and reserves. So all we have to find out the current liabilities, the total current liabilities as C, and long-term liabilities, total liabilities as D. So total liabilities will be C plus D will be giving as E, that is the total liabilities. And at last, we will be finding out the capital and reserves. Under capital and reserves, you will be having equity share capital, preference share capital, profit and loss account, and the total shareholders fund will be mentioned. And at last, you will be adding the E and F, that is the total shareholders fund and total liabilities. You will be getting the total liabilities and capital. So in this comparative statements, percentage are to be calculated separately for totals, or also taking the first year total as the base. Vertical addition and subtraction in percentage column is not possible in the comparative statements. In this sum, we are going to see regarding the simple comparative balance sheet. Now here, from the following balance sheet relating to a trader, prepare a comparative balance sheet. So here, balance sheet has been given with 2 years, 2002 and 2003. Under liabilities, you will be having capital and reserves, long-term borrowings from bank, current liabilities and provisions. Under asset side, you will be having current liabilities and investments and fixed assets. Now, before moving on to the solution, you should be thorough with the format of comparative balance sheet. Then only you can proceed with the sum. So, particulars 2002-2003, increase or decrease in the amount column and percentage of increase in decrease of the amount column. Under assets, now the first column is assets. Under asset, we are having current assets. What is the value of current assets? 60,000 and 85,000. We have to compare whether it is an increase or decreased. So the first year is 60,000 and the next in 2003 the amount has been increased to 85,000. So the value has been increased as 25,000. So it has been in increased way. It has not been decreased, it has been increased. So you will be writing as plus 25,000. And under the percentage column, you should be taking the first year value as the base. So 25,000 divided by 60,000, you will be getting 41.67. Next one is investments. Under investments, 2002 the amount is 20,000 and in 2003 the amount is 15,000. So we can see the amount has been decreased in 2003. So minus 5,000. Again, while calculating the percentage, 5,000 divided by 20,000, you will be getting the value of minus 25. And the next one is fixed in assets. The first year value is 70,000 and second year value is 1 lakh. So we can see it has been increased in 2003. So you'll be writing as it has been increased in 30,000. So plus 30,000 and while calculating the percentage, 30,000 divided by 70,000, you will be getting 42.86. So please remember regarding these symbols, whatever symbols which has been coming in the decrease or increase column, that symbol should be used in percentage column also. And the total assets, while adding all the current asset, investment, fixed asset, you will be getting the total assets 1,50,000 in 2002 and 2 lakh in 2003. So we can see 50,000 has been increased in 2003. So plus 50,000 and while calculating the percentage, 50,000 divided by 1,50,000. And next we are moving on to the liabilities and capital. Under liabilities and capital, the first one is current liabilities 30,000 and 40,000. It has been increased in 10,000. So plus 10,000 while calculating the percentage. 10,000 divided by 30,000 you will be getting 33.33. So you will be calculating as 10,000 divided by 30,000 into 100. You will be getting this value. And the next one is the long-term borrowings from the bank. So first year is 40,000, second year is also 40,000. So there is no decrease or increase, it will be nil. So no need of calculating the percentage for all, that also. And next one is total liabilities. So if you add the current liabilities and long-term borrowings from the bank, you will be getting the total liabilities. So total assets and total liabilities we have found out. And the next one is capital reserves which have been given in the question. So capital reserves is 80,000 and 1,20,000. So it has been increased in 40,000. So plus 40,000. 40,000 divided by 80,000 will be getting 50 point. That is 50. Okay, and the next step is total liabilities and capital. So you will be adding the A and B. So 1,50,000, 2 lakhs. So the value has been increased into 50,000 and the rate is 50,000 divided by 1,50,000. You will be getting 33.33. So both the assets and liabilities column will be tallied in comparative balance sheet. Next, we will move on to the next sum. From the following balance sheet of X Limited as on 31/3/2003 and 31/3/2004, prepare a comparative balance sheet and give your interpretation. Before moving on to the sum, you should be thorough with the format of comparative balance sheet. So you will be having assets, under assets, current asset, fixed asset. You will be having total assets A plus B, and under liabilities and capital, you will be having current liabilities and long-term liabilities. And then you will be having total liabilities C plus D. And at last, you will be having capital and reserves. Under that, you will be having capital and reserves, equity share capital, preference share capital, profit and loss account. That will be considered as a shareholders fund. And at last, you will be calculating the total liabilities as E plus F. So you will be having the total liabilities. In this sum, they have given the liabilities of equity share capital, preference share capital, debentures, profit and loss account, sundry creditors, outstanding expenses. And under asset side, we are having land and building, plant and machinery, furniture, stock, debtors, and bank. Now let's move on to the solution. Comparative balance sheet of X Limited as on 31/3/2003 and 31/3/2004. Particulars: 2 years. Decrease or increase column. Percentage of increase or decrease column. And the first step is we are going to calculate the total assets. For calculating total assets, we need current assets and fixed assets. Under current asset, we are having stock, debtors, bank. So this will give you total current assets. So under stock, the first year value is 30,000 and second year value is 45,000. So it has been increased at the rate of 15,000. So plus 15,000, 15,000 divided by 30,000, you will be getting 50.00. So plus 50.00. And the next one is debtors, 20,000 and 35,000. Again, it has been increased at the rate of 15,000. 15,000 divided by 20,000, you will be getting 75. And the next one is bank, 30,000, 20,000. It has been decreased at the rate of 10,000. So minus 10,000. So 10,000 divided by 30,000, you will be getting 33.33. So the total of current assets is 80,000, 1 lakh. Again, it has been increased at the rate of 20,000. 20,000 divided by 80,000, you will be getting plus 25. Now, the total current assets has been found out. Next one is fixed assets. Under fixed assets, we are having furniture, land and buildings, and plant and machinery. So land and buildings, first one is land and buildings. The amount is 80,000. The next year amount is 1 lakh. It has been increased at the rate of 20,000. 20,000 divided by 80,000, you will be getting 25. Plant and machinery, 50,000 and 65,000. It has been increased at the rate of 15,000. So plus that is 15,000 divided by 50,000, you will be getting 30 plus 30. The next one is furniture, 10,000, 5,000. It has been decreased at the rate of 5,000. So minus 5,000. 5,000 divided by 10,000, you will be getting the 50.00. So the total fixed asset is 1,40,000 and 1,70,000. It has been increased at the rate of 30,000. So 30,000 divided by 1,40,000, you will be getting 21.43. So we have found out the total current assets and total fixed assets. So the total assets will be total current assets plus total fixed assets, 2,20,000 and 2,70,000. So again, it has been increased at the rate of 50,000. So 50,000 divided by 2,20,000, you will be getting 22.77. So the assets parts has been over. Now we are going to calculate the liabilities and capital. Under liabilities, we are having current liabilities, long-term liabilities, and the total liabilities will be arrived. Okay, and after that we have to calculate the capital and reserves to find out the total liabilities and the capital. Now, under current liabilities, the first one is sundry creditors. and second one is outstanding expenses. So sundry creditors, the first year value, that is in the year 2003 we are having 7,000, and in the year 2004 we are having 12,000. So it has been increased at the rate of 5,000. 5,000 divided by 7,000, you will be getting 71.43. And the next one is outstanding expenses. The first year value is 1,000 and the second year value is 3,000. So it has been increased at the rate of 2,000. 2,000 divided by 1,000, you will be getting the value of plus 200. Okay, next one. After finding out the total current liabilities, that is current sundry creditors plus outstanding expenses, you will be getting the total current liabilities. You should be writing as C. So 8,000, 15,000. It has been increased at the rate of 7,000. So 7,000 divided by 8,000, the value is 87.50. So total current liabilities has been over. Now long-term liabilities. So under long-term liabilities, we have debentures and long-term, we have only debentures. So no other expenses has been given under the long-term liabilities. So debentures, first year is 50,000 and second year is 30,000. It has been decreased at the rate of 20,000. So 20,000 divided by 50,000, you will be getting 40. And the long-term liabilities we are getting is again the same value because we don't have any other items to appear under the long-term liabilities. So 50,000, 30,000, again it has been decreased into 20,000. You will be writing as 40. Now total liabilities is C plus D, that is you have to add the total current liabilities plus total long-term liabilities. You will be getting E 58,000, 45,000. So 58,000, 45,000. Here the amount has been decreased at the rate of 13,000. So you will be writing as 13,000 divided by 58,000 minus 22.41. So the liabilities, current liabilities and long-term liabilities has been over. Total liability is over. Now we are going to calculate the capital and reserves. So first one is equity share capital. It has been given as 1 lakh, and in second year it has been given as 1,50,000. So gradually it has been increased at the rate of 50,000. So 50,000 divided by 1 lakh, you will be writing as 50 plus 50. And the next one is preference share capital, 50,000, 60,000. This is also increasing in the next year at the rate of 10,000. So 10,000 divided by 50,000, you will be writing as 20. And the last one is P&L account, 12,000, 15,000. Gradually it has been increasing at the rate of 3,000. So 3,000 divided by 12,000, you will be getting 25. So we have found out the total liabilities and now we are going to find out the total shareholders fund EF. So E part has been found out. Now we have calculated the F part, that is total shareholders fund. So the first year the value of total shareholders fund is 1,62,000, and in the next year, that is in 2004, the value is 2,25,000. So it has been increased, gradually increased, plus 63,000. So 63,000 divided by 1,62,000, you will be getting the rate of 38.89. So everything has been found out. Now we are going to add the total liabilities and plus total shareholders fund. If you add 58,000 plus 1,62,000, you will be getting 2,20,000, and if you add 45,000 plus 2,25,000, you will be getting 2,70,000. So gradually it has been increased at the rate of 50,000. So you will be writing 50,000 divided by 2,20,000. The value is 22.73. So both the assets and liabilities column will be tallying. So in this video, you would have learned how to prepare the comparative balance sheet. And again, I'm repeating the format of comparative balance sheet. You will be having assets and liabilities and capital. Under assets, you will be having total current assets and current assets and fixed assets.
Under liabilities and capital, you will be having current liabilities, total long-term liabilities. We will be adding total assets column separately and total liabilities. You will be finding out the total liabilities, and after that you will be having capital and reserves, and under capital and reserves you will be having equity share capital, preference share capital, profit and loss. This will be considered as total shareholders fund. To arrive the total liabilities and capital, you have to add the total liabilities and total shareholders fund to find out the amount relating to the comparative balance sheet. Now, in the next class, I will be explaining the common balance sheet statement. If you have any doubt regarding this sum, you can ask me personally or through Google Classroom. Thank you.